This is urgent. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, JP Morgan issues a stock market warning as a leaked report now shows a hidden volatility time bomb sitting underneath the equity markets, suggesting that any move to the downside could be amplified in a major way, and which makes this my most important and timely video of the year, as you're about to see, particularly as we see massive amounts of complacency in equity markets today. Plus, we have a sponsor for today's show, Carbon Revolution. You can find them on the NASDAQ under symbol CREV. They're a leader in carbon wheels, and they have the legendary Bob Lutz as the chairman of their board, and demand for their products is just off the charts right now. And speaking of off the charts, their stock is breaking out of supply zone, which suggests, based on the charts, could say it move up by 83.4%. This is not a move you want to miss out on, and it's on the back of a strong analyst buy rating. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now, let's head over to JP Morgan, and as we do every Sunday, we like to look at the technicals, momentum, and machine position in the market to make you a better trader and investor. And we've got the headline of option-based ETFs from this report now from JP Morgan, as investor adoption of option-based ETFs continues to broaden, driving strong growth in assets in the number of variety of products offered. Assets in these U.S.-listed option-based ETFs have surged to a massive $100 billion across 300 products, with assets growing at a whopping 700% over the past 3 years. And why this matters? Well, these products are monstrous volatility suppressors, suggesting that anything, and I'm going to show you some catalysts that are coming over the next several weeks that could send stocks down. Well, this is bad news for the equity markets, because these call overriding ETFs have become a large source of volatility supply that has been increasingly weighing on market volatility levels, as what they're designed to do is suppress volatility. The problem happens when volatility starts to rise. Well, all of these products could lead to an accelerated move to the downside, as you're about to see. In other words, in case of a significant market sell-off, the volatility suppressing force from these strategies is likely to disappear, leaving markets more vulnerable to other selling flows from things like volatility targeting funds, CTAs, momentum investors, things we talk about in this show every Sunday. And as such, other short volatility strategies that have become dependent on the volatility suppression from these overriding funds may find they offer little help in a tail risk scenario. And that's the danger here, is many people have become very complacent about the U.S. equity market, suggesting that now it just only goes up again. But what they don't realize is the underlying structures have changed, they've evolved, and there's lots of risk sitting underneath them. And while things are calm, everything's fine. But something that could cause a spark can send stocks moving down far sharper and deeper than most realize. And yes, there's a potential of instability if there's a big market move for sure, but somebody selling those options doesn't necessarily mean there's a massive unhedged short base. That's true. There doesn't have to be a massive short base. What there has to be is just anything that causes volatility to spring. And let's take a look at what Goldman suggests could be some of the catalysts for this, and then we'll get in, of course, to our technicals, as we see the fabulous 5 equities now represent 25% of the S&P 500 index. That is a new record. So you can imagine that a downside move that causes people to sell those 5 stocks could be accelerated by these volatility strategies coming unhinged. And here we can see the index return just from these 5 have outweighed, of course, the broad equity indices by miles. And that means that most U.S. investors are crammed now into 5 stocks, and even foreign investors, again, suggesting that any sort of catalyst that could drive markets down will cause forced selling, and then, due to these volatility strategies, will accelerate that move to the downside. And one of those such events could be the corporate buyback blackout window, which now begins on March 14th, as we mentioned last week, and is expected to run all the way through April 26th. And this is huge because demand now for U.S. equities is dropping by 35% from the largest buyer. And this is coming at a time when we already know that retail investors are all in, But it's not just retail investors or institutional investors who are in, it's the machines, and they're looking to sell. And here you can see that the sell skew in 5 out of 6 scenarios over the next week. That's not a big deal in a down tape, only 11.4 billion. That's global equities. 5 billion out of the US, that's not much. Retail investors could feasibly absorb that. Look at what happens over the next month, because there's something that happens a month from now that's going to cause people to sell whether they want to or not. Here you can see in a down tape, 168 billion of global equities, 48 billion out of the US, and without these big corporate share buybacks to back that, well, we could see an accelerated move down by the machines. Could cause volatility to spike, because here you can see systematic positioning between CTAs, risk parity, and vol control funds in blue are near extreme levels. But what is that catalyst that's coming? Well, it's tax day, and here you see Goldman warning that the average path of the S&P 500 during April since 1985 suggests as we get closer to April, they note historically equities could rally. But I'm going to show you based on the chart something has shifted, and then they're selling into tax day. So here you have the case where corporates aren't buying, machines could be selling, and retail's forced to sell. Could create an outsized move to the downside. Does that mean we're in an all-out bear market? It doesn't. It just means the structures of the market have changed. This is important as traders or investors to actually control your risk in these environments. Now let's take a look at our signals here. We've got momentum on the S&P is still positive. The relative strength indicator is at 56. It's been cooling off. The MACD, the moving average convergence divergence, that's got a negative cross night now. But our own Momentum Timer Pro, which takes a look at these signals and other technical signals and adds one proprietary overlay that no one else uses, still notes that momentum is still up with 41 consecutive daily buy signals. How do you get Momentum Timer Pro? Well, there's a link in the description below, and you get a free month. We show you how to trade this report. We give you videos. We give you the report. We show you how to properly trade the technicals to make some big returns, and you can jump on that. Again, a free month. We have a buy it open sitting on the S&P 500 using our reports that I'm showing you right now back on November 3rd. That trades up 17.7%. And what do we have? Our stop loss at 503.02. And there's a critical point here, is controlling your risks to the downside, because what's important is when you make money, you want to hold on to as much of it as you can. And so if there is an outsized move to the downside, that now gives you ammunition to buy back in. That is absolutely critical, because we talk about machine positioning being at extremes. Well, how do you get ahead of that? Well, you jump on our CTA Timer Pro. Again, link in the description below for that as well, and a 30-day trial. We show you, again, how to trade ahead of the machines. Our report on the fast algorithm here and the slow one suggests extreme long positioning. We show you when to find the ones when they're extreme short and take the long side. Let's take a look at the chart here, because things have changed on the S&P, and I want you to look at this and understand what's going on. Now, normally, we look at a long-range chart right now. I've got a zoomed in version. We're looking at the 30-day chart. And you notice this line here, this red line, this is the volume profile. And this is where the most shares have been traded over the last 30 days. Now, if your trading software doesn't have it, there's plenty to do. Go out and find it. Because what I want to show you here is the S&P is sitting on this level of support. In fact, buyers have come in and bought this level before. If it breaks it, well, that means people are going to be net sellers. And if we zoom in, you can see it's sitting right on the 10-day volume profile line. This is a danger zone. Buyers above, sellers below. Looking like the sellers here are going to win out. And that is, again, we start to look at the risks of the market, and we say they're getting higher and higher, suggesting that this is an opportunity for you. And again, why this is my most important video of the year is I want you to hold on to these gains that you've made. Now, if you don't have a stop loss, maybe in your 401k that you can utilize, write it down, trade it out. You keep control of your money, because what happened with the QQQ? We got stopped out of this position. And what are we waiting for? A reset. It's got one consecutive daily sell signal on our Momentum Timer Pro. Our fast algorithm on our machine positioning is starting to back off. But look at this. We even give you the 1 month, 3 month, and 6 month windows on momentum, and they're maxed to the long side on the S&P and on QQQ, suggesting the money's likely been made on this already. And you can see that here right in the chart. You notice on the 10-day, the QQQ has broken down below the volume profile line, selling down. Let's zoom out to the 30-day chart. You see it's breaking down. The S&P here is on that same path. Let's go to the 90-day chart. And what do you see? It's way down below, suggesting that a pullback could go that deep. That would be a huge opportunity to reset positions. If you imagine if of course, the S&P or the NASDAQ gave up that kind of a gain, well, that would be an opportunity for you to reload. We give you all the tools you need to do that. And while you're checking those out, be sure to check out our sponsor for today's show. That's Carbon Revolution, trading on the NASDAQ under the symbol CREV. We'll show you an incredible chart setup on that. Now, we don't have anything updated from, of course, Goldman or Nomura we normally like to have on the bond side. But we note that the machines have probably been sellers here, and now they're calming down. Here we can see TLT momentum actually is negative. I forgot to retype that. That is my error. RSI is sitting at 41. MACD's got a negative cross. You see Momentum Time Pro, one consecutive daily sell signal, but notably on a 1 month window, it's still got a buy signal. That's positive. You see it's selling down on the fast side, but holding on the long end. What's the difference between the fast and the slow? Less money traded here, a lot more money traded over here. Our own positioning, we are actually, this should say this is a minus sign. This is actually minus 2.59%, but we've shown you how to actually trade our own reports if you don't use stop losses, which we encourage you to do, how to use our reports to dollar cost average your way in, back into the gains. This was positive last week, negative this week, but let's take a look at TLT here, and we can see again, all kinds of buying coming in underneath this. Here you have on that 10-day chart. Look at this volume profile. So we saw this selling here on the reports from earlier last week, and then further selling. And look, all of a sudden there's accumulation here right in the supply zone. And why does that matter? Well, you can see the sellers above here didn't hold, or the buyers didn't hold there. But as you zoom out, you start to see is forming into that supply zone just as we've drawn on the chart. And why is this critical? Because the supply zone over here were sellers. Now those sellers have turned into buyers. You can see them on the 10-day. If they break out and get back above that 2-year line, what happens is they've got sellers right here to work out, sellers here, and sellers here, creating an upside move potential for TLT. Meanwhile, you can watch the equity markets go down, look to reposition here some assets. How about gold? Many of you got this call right. I didn't chase gold on our reports. Why? Because they were already long. There's other opportunities. I'll show you those. Momentum positive on gold. We had 19 consecutive daily buy signals. But why didn't we like gold? Because the machines were already fairly long on this, and that was a catalyst to not take a position. Look, if you're looking to trade and make money in the market, you want to find things that are cheap, things that other people don't want, and then wait for the positioning to change. This is what we do for you in our reports. We show you those signals. We have huge success rates. We show you this during the week. Jump on it. 30 days. You're going to make more money trading than you ever have. Maybe you just want to start trading. We'll show you that. But there was a bigger opportunity in gold mining stocks with GDX. Momentum here positive. 12 consecutive daily buy signals. We nailed this. We had 2 buy it opens. We're up 9.05% on that trade. Cost basis sitting nicely below that. And what do? Raise the stop loss. Raise the stop loss. Hold on to gains when we have them. And that sends our next upside target into the $31 range. But look at this. Our machine positioning says it's already long out. And how about our momentum signals? Well, we have on a 1 month a mid-size. So it's still saying that momentum is aggressively moving here. But let's take a look at a chart of GDX and see what's going on, because look at this on a 1-year chart. It's sitting right above that 1-year volume profile. That is beautiful. It rallied up, broke through it, pulled back, and looking like it's going to break through. Let's zoom into the 90-day chart. Boom, perfect view. You see it again, holding that 90-day volume profile. Excellent. How about over 30 days? Way below, not a factor. How about the 10 days? Sitting above. So that's the key thing here, is we give you those signals. Not only that, but you look at the difference between, say, the NASDAQ and the S&P, which are now starting to trade below their volume profile. You look at something like GDX trading above it. You look at TLT trading at it. You see where the opportunities lie here. Let's look at some other ones. We had palladium. Momentum positive on this. We nailed that trade with our reports too. at 12.12%. Again, you know what's great about this, not only would we give you a free month, but you could make enough money on one trade to pay for all your research for a year. You bank the rest of it. We give you all the signals. Look at this. Machine positioning went from short to long. We nailed that call. Momentum all of a sudden maxed out on the 1 month window. Upside target now looking like the 200-day moving average. Let's take a look at what's going on here with PALL. That's palladium. And here you can see on the 10-day volume profile sitting right underneath there. That's beautiful. How about we zoom out to the 30-day right underneath it? You want to talk about something that looks like it can go up more? Well, here you can see palladium. Again, we nailed this trade in a big way. Next call, 200-day moving average. You can see sellers are fighting it, but this thing just has been rocketing higher. Again, there's one way right there. We showed you how to pay for all your research for a year. Speaking of that, how about agricultural commodities? Many of you were shaking your heads at this trade. Look at that, up 12.55%. Again, all we did was use our reports. They are that easy to do. Now, granted, not every trade comes out great, but if you control your risk and focus on the ones that are moving, that's where you do. How about this? RSI, this thing is overbought. MACD, monster positive cross. We have 41 consecutive daily buy signals on our CTA time or momentum time report. It maxed out on the 1 month window. What do? Raise the stop loss level. If that's what you're thinking, you got it right. Let's take a look at DBA here. And what a monster of this trade. Remember, we picked it back right up in here. Many of you said, no, it's still going down. Now it's taking off like a rocket. Where this goes, nobody knows. We have to even go out to the 10-year chart here. Let's go and see. You'll notice it's now we had to go out to the max weekly chart. How about that? This thing is just looking to break out, potentially now up here into the $25 range. And what are we going to do? Chase it higher with our stop losses. That's a critical level. Here you can see on the 10-day volume profile, people are loving U.S. agricultural commodities, and along with that, we think a huge opportunity is soybeans. This trade now up 3.78%. Again, we showed you this on our show. We subscribers saw this trade. We made videos for it. We make it so easy for you to make money. Momentum positive on this one as well. Machine positioning now moving toward max long positions. We see momentum building steam off of a steep sell signal. This is critical. Why is that? Let's take a look at soybeans here, and what do you see? Boom, look at that, right under that 10-day volume profile. Let's zoom out. Over the 5-year, you see, look, big drop, big drop, big drop. We said, look, the catalyst is huge. There was a $4 price potential move off this, and we know that when it takes off in a big way, and there it's happening. Again, sitting right underneath there, you have it, the 30-day volume profile. Beautiful setup here on soybeans. Let's talk about some other trades. Dollar bullish. That thing is looking like we think it's going to roll over here, but for the moment, the UUP remains upward trend. Let's take a look real quick at UUP because I want to show you the trade setup from our sponsor. It's absolutely incredible, but notably on the 30-day chart, you see the running into headwinds with the volume profile. This thing is just running right into that 21-day moving average. Not a lot of hope here, but one thing we can say, we did get stopped out on our trade for the Japanese yen FXY. I think there's still potential in this trade at another point. Not today. We stopped out for a nice 1.07% gain after 15 days. How about that? That could change. You do that every 15 days. Boy, that would make a huge difference in your trading account. How about FXY? Let's zoom in. Why don't we like it? There you go. If we made our money, it's pulling back. Look for another reset or a change in the dollar on that. Now, let's talk about our sponsor for today's show because they have a tremendous opportunity with Carbon Revolution. Again, you can find them on the NASDAQ under the symbol CREV. We show you how to trade the technicals. We show you the momentum. You want to see a company that's got momentum behind its stock? Well, that's Carbon Revolution. Again, all the information in the links and the pinned comment description below. You've got that. Performance with them is everything. Efficiency is everything else. The Carbon Revolution is a global technology company and a tier 1 OEM supplier, which has successfully innovated, commercialized, and industrialized the supply of lightweight carbon fiber wheels to the global automotive industry. And with over 70,000 Carbon Revolution wheels on the road, they're one of the recognized leaders in the sector, and they penetrated the performance and premium into the market with OEM programs for Ford, Ferrari, General Motors, Jaguar Land Rover, and Renault. And they've announced that Bob Lutz has become the chairman of the board. You may remember him. He used to be including the vice chairman of General Motors. Guy's got amazing background in the industry. He said, "I'm excited to become chair of the board at this transformative time when the company is disrupting the global automotive wheel market with its unique lightweight carbon fiber composite wheel technology. It's Carbon Revolution, NASDAQ symbol CREV, is the only company to sell carbon fiber automotive wheels at scale. Big opportunity because they've got an extensive intellectual property portfolio, which gives it the edge over its competitors. Along with its patents and proprietary knowledge in place, the company is in a unique position to continue leading the way and disrupting the automotive wheel market with an eye to the aerospace and industrial wheel markets in the future." And their sales are bank rolling off the chart as demand for Carbon Revolution's world first 23-inch carbon fiber wheels hit unprecedented levels. We're thrilled that the first half of 2025 Range Rover Sport SVs, or half of them sold in the United States, have been optionally equipped. Again, that's by choice of the buyer with Carbon Revolution's carbon fiber wheels. This represents a massive take-up rate for the world's first 23-inch carbon fiber wheel, demonstrating strong consumer preference for the products and their disruptive lightweight technology. The other thing we think is going to be very disruptive is when their stock moves up in a big way. And it's going to be on the back of an analyst strong buy rating. This from Craig Hallam. Let's take a look at why they're so excited, and you can see why we are happy to have Carbon Revolution as a sponsor on our show, because if we draw on the supply zone. Now, why do these matter? Here you can see the buyers down here, sellers above. How do you know there's buyers here? Because look, it gets into the buy zone. What happens? Volume spikes, buyers come in. And then what happens again? Buyers come in, and now starting to break above the supply zone, suggesting the next move is back into where the sellers were at. That represents, my friends, an 83.35% move from its current value. Here you can see, zooming in, we talk about volume profile. Look at the 30-day. You can see buyers stepping in here. There's a volume right above this volume profile line, looking to break out higher. And you can take advantage of Carbon Revolution's opportunity on the NASDAQ under the symbol CREV. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.